if you follow the money in every single topic, eventually it has to lead back to, like you said, the Fed, monetary policy, what they're doing with the money supply.
I'm here to tell you very, very quickly about how I am absolutely exploding my growth on YouTube. This tool is called Cast Magic. So, all you have to do is input your link to Cast Magic. It will give you a transcript of your entire podcast or YouTube show. It will give you all of the AI content you could ever imagine, including introductions, speaker bios, keywords, titles, timestamps, threads, promotional tweets, blog posts, and much, much more. You even get Magic Chat where people can treat your podcast like ChatGPT and ask questions about it. There's so much more. Cast Magic and use code casting30 to get 30% off. Okay, thank you. I hope that was fast. Enjoy the podcast. Okay, so hello everyone. Welcome to another episode of Chatter. Today I am delighted to be joined by James Lee, citizen journalist, YouTuber, and creator of 5149 with James Lee. Welcome to the show, man.
Hey, happy to be here, Josh.
Not a problem. So yeah, I came across your channel because of the video you did with Ian Carroll about GameStop, which we will definitely come to. But I guess probably the best place to start, as you said there a minute ago, was to just, give people a little idea of who you are and your background, and then we can dive into some of the interesting things you've been covering on your channel.
Yeah, I think that's good background. It would be always good for the audience. So myself, how I got into the space, I started doing videos on YouTube about 4 years ago, but prior to that, I am very much cut out of the cloth of just mainstream business. I went to New York University, got my degree in business, MBA. I worked in management consulting for 4.5 years. So if you think about, if you're in that space, I think companies like McKinsey, PwC, E&Y, these types of companies. I worked at, one of these firms. I deleted my LinkedIn ages ago because I started actually doing videos when I was still working there because I hated it so much. But I was involved in all kinds of different projects that actually are quite relevant. Maybe we can I can give you a little nugget here later. But basically, I just, why I left that space was more or less I realized that what we were doing there wasn't really creating any value. It was more just value transfer. Every single project was just trying to transfer money from normal people to the elites. That was just the entire ecosystem, and that's what it was. So then I just started making videos online, just talking about various topics. And naturally, you're not very good at them at first, but you just dig into more and more stuff, and try to build an audience organically. I started at zero, and then eventually I got connected to this pretty big YouTube channel called Breaking Points, which is a news channel. I don't know if you've heard of Breaking Points or your audience has, with Crystal and Saga.
Yeah.
So now I also am a contributor for them. So I do kind of bi-weekly segments for them on their channel.
Yeah. Wait, was Breaking Points the one they did with The Hill, or is that what they called their show when they left?
Yes, that's what they called the show when they left. So it was initially Crystal and Saga were employed by The Hill. There was a show called Rising.
That's it.
And because of various, I suppose, editorial control decisions and other things going on because The Hill, what they tried to do was market themselves as like a anti-establishment program. But the problem with that was that the parent company was very establishment, right? It's one of the most established ones. I mean, they're literally in DC and owned by, I think it's changed hands since, but essentially it's the same kind of media ecosystem. And so there were things that they were getting calls about. This is from, they said this publicly, like they do a story and somebody calls in, from up top and says, we don't like that. We don't like that story. We let's not do that again, kind of thing. And I think they just went and did their own thing and started, I think.
Yeah, I think Rogan
channel, and it's been incredibly successful.
Yeah, I think Rogan could probably take some credit from what I understand. Like he had them on his show, and was basically being like, you need to go your own way and like do your own show. And then they decided to take the leap, and it's been incredibly successful, which is great to see, which sort of proves that there's a market out there for people who would like to have like legitimately like establishment challenging quality journalism.
Yes, I think the news space is so exciting because anybody can do it. The barrier to entry is much lower, right? Before you needed to be hired by a big company and you needed to go up through traditional channels, whether you knew somebody or you got a journalism degree or went to a good school, something like that. Now anybody can do it. Of course, that creates challenges because there's a lot of people putting stuff out there that may or may not be true. But I'm of the mindset of I don't know what they call it, but the counter speech doctrine, something like that. It's like, hey, the way to combat bad speech or misinformation is to just put out better information, right? Because yesterday I actually did something. So somebody put out there, there's a fun conspiracy, or it was going on for a little while, that they thought, okay, maybe Joe Biden has died because he didn't appear for 5 days because he announced that he was not going to run in 2024, and nobody's heard from him, and people were putting out all kinds of stuff. And this guy
I was pretty
put out
convinced.
information, or he made a video saying that his voice, that he called, because he called into a Kamala press conference, and they're like, hey, this voice is AI. They ran it through some kind of AI
Detection.
detector and said, oh, 98% AI. And I was like, that was okay. If that would be crazy if it was true. So then I did the same exact thing. So I downloaded the thing, the audio file, and I put it through the same exact test, and I did not get the same result. So
What
so this
result
is
did
the
you
kind of,
get?
I had 2% potential of it being AI versus 98%.
That's quite a big
And so
difference.
this is yeah. And so this is what I'm talking about, is like, I think the mainstream would say, hey, we need to shut this guy's account down. He's a danger to society. And I would say, well, no, I don't know who he was, but he's obviously doing some kind of digging around, and maybe he fabricated, maybe not. But for me, I just created another video and said, hey, I'm fact checking this, and it seems like it's not true. There's other things that we don't really know about in terms of Joe Biden's condition, because they've been very mum about it, because he's supposed to give some speech, I think today or tomorrow, but it's going to be pre-recorded. So it's not
Mm.
live. There's no press. So there's a lot of weird things happening. But in terms of that claim, you can usually just, okay, let me run my own test. And that's kind of where I stand on free speech and press coverage and misinformation and these things like that.
Mm. I mean, it could well have been a pre-recording if he was ill,
It could, because it's
you
the
know.
funny thing is Kamala almost slipped up. I don't know if you saw that clip where she said, "Oh, hey Joe, I know you're still on on the call."
Yeah. Reco- Call. Yeah. Yeah. It like I mean, speculate as you will. I was pretty convinced he was either dead or very medically incapacitated. But then yeah, there was that footage of him getting on the plane. So as long as you believe that that's the real Joe Biden, um, who knows these days? It's bonkers.
That's speculation, which, I think
Of
people
course.
can. There is evidence of like people putting on masks, that's been done in the past, so it's not like a 0% chance. Although then I start to think, well, why, if he actually just died, then if he's dead, that
Mm.
might even be a good thing for the Democrats. If you think political strategy, now there's now that changes the whole news cycle. They're talking about his legacy, and now the Democrats get a boost versus Trump assassination attempt. All the momentum was on the Republican side. So then I start to think through incentives. Like, would they want to? Why would they even want to hide his death? Doesn't make any sense. But that's just my opinion.
Yeah. I mean, theoretically, it would be because then Kamala doesn't have to be president. And it's way easier to convince people that she'd be a good president if she doesn't have to be president.
That's
But, just
that's a fair
for
point. That's
consideration. But I do get your point. I mean, I'd say they'd get like at least quite a lot of media coverage and the ability to be like, yeah, people always talk better of the dead. Suddenly you start remembering all the great things they did, and there'd be montages of all the wonderful things Joe Biden did through his career. I think you're right. It would probably be like campaigning gold. So Yeah, we'll see what happens. While we're on this topic, who do you think? So this will be out. Not next week, the week after. So bearing in mind this will be out in 2 weeks' time. So we're talking at the end of July here for people
Mm.
listening. Do you think it's just a walk for Kamala Harris to the nomination, or do you think there's going to be some sort of challenge?
You mean, do I think she's going to win easily? If that's the question, absolutely not. Because we have to remember, I mean, her campaign in 2020 flamed out even before the first vote or for the first primary was ballot was cast. And so she had all the establishment backing too, because she was like going into the 2020 primaries for the Democrats, she was one of the strongest candidates, strongest in terms of establishment support. But then she started talking, and then people it didn't resonate at all. So I think now it's the excitement from the Democrats. I think it's purely coming from the fact that Joe Biden was so mentally and physically weak that in contrast, she looks really strong because she can speak.
Hmm.
And but I think she's deeply unpopular. Some of the things that she's done through her record as a DA and as attorney general, um, there's issues there with some of the black community. There's also all kinds of other, I think basically it seems like she's a person that wants power. This is my opinion. She's a person that wants power for power's sake. She doesn't really have a platform. There's quotes of her in the past like, "Oh, what should my platform be?" and this kind of thing like that. So I don't think it'll be a cakewalk. I think in the U.S. elections, it always comes down to a few key swing states.
Hmm.
Because I think she'll definitely win the popular vote, but there's just a few key states like Wisconsin, states like
Oh, I meant for
Michigan, Pennsylvania.
I meant for the nomination. I don't even mean for the
Oh,
presidency.
but
Um,
the nomination is a done deal.
you think so?
It's a done deal.
Okay.
Yes. The amount of money she's already raised, I think it was like something like $180 million or something like that in the
Yeah.
past week. The nomination is a done deal. There will be no challenger because this is what the Democrats do. Basically, the Democrats anoint their candidate and they basically shame or pressure any other person from running. So there's going to be no legitimate person that there's going to be somebody maybe who wants to run, but there's not going to be like a Gavin Newsom or
No, well, he's
trying to think
endorsed her,
Gretchen
right?
Whitmer.
Yeah,
These kinds of
she's
high
endorsed
pro.
her as well, right? They've both
Yeah,
endorsed
so
her.
all these people have already endorsed. The people who could have run
Hmm.
have already endorsed her.
Michelle Obama hasn't endorsed her.
Michelle Obama has not. That's true. That's true. And that would be, I think, the only possibility. But I don't think, based on my gut feeling, that she wants to do this at all, or else she would have already done it.
Yeah, well, apparently, rumor has it that the DNC, like early in the year and last year, were just, you know, metaphorically backing trucks of money up to the Obama house, being like, please, 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 and she was just like, no. I mean, they've had their 8 years where they were just
Yeah.
endlessly in the spotlight as you know, the first family, and I think you probably don't want to go back to that. The only thing that I
No.
was curious as to how realistic people think it is the RFK still putting its name in the hat as the Democrat nominee.
That would be, honestly, if the Democrats wanted to win, they
Yes.
would do that. Because if you look at the polling and the gap between 2020 and 2024, I saw some numbers the other day. All of the I guess the not the gains, but the losses they've had, it seems to be going to RFK. It's
Hmm.
not going to Trump. It's just going to RFK. And if they would have run a fair primary, I mean, RFK was running in the Democratic primary. He wanted to run as a Democrat. They just wouldn't let him do it. And so he had to go the independent route. So if they were smart, yeah, I would think they would put together like an RFK Kamala ticket, and that would be 100% chance guaranteed win.
Yeah, because there was a poll done, interestingly, like a Trump Kennedy head to head by Zogby poll or Zogby polling, sorry, on the 11th of July, so the right before the assassination. So that might have changed somewhat as a result of that, but that RFK was on 57 to Trump's 43 if it was just a dead heat between the two of them. So I think you're right. If they really wanted a knock it out the park win, they would go with RFK Jr. But he is the absolute enemy of corporate America, and that's who owns the Democratic Party. So it's almost guaranteed to not happen.
Absolutely. Yeah. RFK Jr. was the Democrat media darling until he wasn't, right? If you look at maybe 15 years ago, he was kind of a rock star because he was an environmental lawyer. He was doing all kinds of stuff that they liked. But then all of a sudden, when he started talking about big pharma, he started talking about
Monsanto.
corporations, things like that. I mean, specifically, he was talking about the vaccine, but the point of the vaccine that's always misconstrued is he's talking about um, the the immunity that companies get, that they don't have to be responsible for any kind of injuries that come out of vaccines, which is very different than any other drug. So,
Yeah, and
why?
it's like it's a pain point for him because like his vocal problems were literally caused by a side effect of a childhood vaccine, as far as I understand. So yeah, and I find it really interesting actually that that attack line that was pumped out about him for a month or so when he first entered the race just disappeared because he started going on loads and loads of podcasts and just being like, here is the actual evidence in court of everything that I'm saying. You know, just everything that he was like legitimately trying to claim, he had taken people to court about it and could prove in like unfalsifiable court documents. So yeah, I think they learned very quickly that you can't come at the man because he's an environmental
Well, they
lawyer.
tried other things. They Beyond that, they said, well, he's maybe eating goats or dogs or whatever, or he sexually assaulted somebody 25 years ago. All kinds of character assassination stuff. So when you hear in the media, when they go this hard and try to character assassinate somebody, it's always good to dig around as to why they might be doing something like that versus they could just be more accurate in their policy coverage versus just saying, "Oh yes, the man is a maniac and he had brain worms, all kinds of stuff." Which is, and then for the average, I think for the average American, they kind of say, "Well, this guy's kind of a kook. I don't want to be involved in that. That's not a good look for me."
Yeah,
So they just kind of dismiss him.
yeah. I mean, if brain worms lead to this, I mean, sign me up. Like,
Yeah,
like if they
I
make you
know. Right?
that articulate and principled, like, I'll take one. Like, it's not a serious comment. Anyway, so to get onto some of the stuff that I wanted to ask you about that you've covered on your channel, I guess the place I'd like to start would be some of the coverage you've done of the Fed, of the massive expansion in the money supply over the past decade or two, and its kind of relation to inflation and the financial system or the financial situation that many people find themselves in today. What what made you interested in looking at that aspect of like finance and economics? Because people often get caught up in the stuff that we've just been talking about, as you know, we just did. In that they're talking a lot about, you know, the day to day like dramas of politics, and like, oh, you know, this person says
Yeah.
this, and like, oh, you know, well, yeah, go, and like, and yet the thing that underpins the entire economy is the monetary policy of our central banks, whether that's the Bank of England in the UK or the Federal Reserve in America. So what like drew you to that in the first place?
Well, I think there's a long answer, but the short answer would basically be a lot of how I choose my topics that I cover is following the money. So if you follow the money in every single topic, eventually it has to lead back to, like you said, the Fed monetary policy, what they're doing with the money supply. And so naturally it would lead into this particular topic. Now, I'm just going to preface to say I'm not an expert in the Fed. I've done coverage on the Fed. I don't know all the ins and outs of it. But from what I understand about the Fed, it's there's there's good reasons why central banks exist, right? There's good arguments for that, and I learned about all of that in business school and all kinds of, like, we were taught this more mainstream of why it needs to exist, the Federal Reserve Act, and how it stabilizes economies and all this stuff, right? But on the flip side of that, the way these institutions are designed and now has evolved has been it's very opaque. It's not transparent. We don't know a lot of the stuff that's going on behind the scenes. And so this is where I think it leads people down to question, which is a good thing, right? There's a lot of conspiracies about the Fed, which I'm not really that well versed on, but I do know, some of the things that they do can be questioned of like when, why did they decide to raise interest rates there, or why did they decide to lower it there at that particular time, or even looking at total monetary policy of like, hey, why do they even land on 2% inflation, and who does 2% inflation benefit, right? If you start thinking along those kind of large incentives, then you could really see, okay, now we have this system. It's supposedly there to create stability for everybody, right? Because they have these mandates, right? They're trying to maximize price stability, lower unemployment. They're the dual mandate of the Fed. But if you look at some of the things that they do, then it's like, okay, who are these policies actually benefiting? And that's where a lot of my coverage lands or ends up, because I've spoken to mainstream economists, I've spoken to more alternative folks as well, and getting their opinion on the Fed, and that's kind of where I land in that. Yeah, there's okay. So let's pick a topic. Maybe let's talk about like 2% inflation, right? So why do we even have the 2% inflation? Well, there's a lot of things that come out of that, because when you think about inflation, it encourages what the whole goal of that is to encourage spending, right? Because if your money is worth less in the future than it is today, then you're more incentivized to spend it. And who does that benefit? Well, it benefits the people getting that money, large corporations, right? And over time, you have to keep juicing the system. And so all the asset owners are rich people. All of the people who work, their wages are not inflating. They're just staying stagnant. If you look at the numbers over the last 50 years, they're stagnant. So all of this is like kind of a money transfer to the wealthy. That's in practice how it's working. And so then you have to start questioning, well, is this a good thing? Because they keep telling us, well, this is how it's done. But then there's other situations. I don't know if you've heard about the situation in Switzerland when they didn't have it, because they always say, oh, well, if you don't have inflation, if you have deflationary conditions, this is really bad for the economy. It could collapse. It leads to all kinds of other bad stuff. But they had cases, in the case in Switzerland where that did not happen, right? They had deflation, but the consumer sentiment was still very high. The economy was fine. And so that's where I start to question things like, okay, what's happening here? Or if you look at interest rates, there's a lot of questions around why they kept, for example, interest rates so low for so long, and then why did they decide to raise it? But the answer I really landed on with the Fed, because I spoke to an economist about this, and he's saying that I don't think this is how billionaires are getting rich off of that's not how they're actually making their money. Because a lot of the conspiracy mind goes to, well, they're trying to create a recession, right? They're raising interest rates. They're trying to create a recession. They're trying to create a wealth transfer. And I think the fact when you land on it is that the rich and the powerful and the powers that be have so much um it doesn't matter what the monetary policy is, they can benefit from them either way. They can benefit when the interest rates are low, and then they can benefit when the interest rates are high. So so then you start to say, okay, do we need to reform this? And that's kind of where I'm at right now, is that obviously this thing has become a giant monster, and it's no longer what it was once supposed to do. And
I think the
and we
issue
need to be able
that,
to look
sorry.
into it. Go ahead. Go ahead.
I think the biggest problem that people have with it is the fact that the government doesn't, like, the government pays debt on the money that the Fed creates. That's like, they pay interest, sorry, on the money that the Fed creates, which is bonkers because it's the money of the US government. That's the bit that I'm always just like, you what? You pay interest on your own money? And there's probably a fairly good mainstream economic explanation for that, but it seems fairly crazy to me. And I think the other big problem that people have with institutions like the Fed is, and if you listen to the previous episode that I've done, when you're listening to this, then it's with a woman called Dr. Suzanne Trimbath. So she is a PhD in like securities and transfers and the plumbing of the stock market works. And I'm currently reading her book, and I'm gonna interview her later, but it will go out first because yeah, it's time sensitive. And she has been laying out how in the book how from 2008 onwards that the Federal Reserve and a lot of their bailout programs and financial management and inflationary controls, and that they have been disproportionately used to benefit the large financial institutions. So she points out that one of the big bailouts under Treasury Secretary Geithner was going to JP Morgan, to AIG. It was being spread, like there was billions and billions of like non-government approved spending being created by the Fed in like for the sake of financial stability, which is fine, but like that's the Fed operating outside the mandate of being able to spend money. Like that's meant to be Congress that allocates funds. And there was a group that I cannot remember the name of right now, but they were heavily involved in loans to small and medium-sized businesses. And if they went under, they were the ones that were going to suffer. And they didn't get the Fed help during the 2008 bailout. But AIG and JP Morgan and Merrill Lynch and Bank of America, they all got the help from the Fed. So I think that's the big problem that people have, is that it seems to be focused primarily on these monstrous institutions that continue to grow as the size of the financial sector grows. And yet it doesn't feel like people's pockets are getting any fuller, whilst we're being told that the economy is growing and the Fed's pumping record amounts of money through the economy, especially all through COVID. And people were looking around being like, yeah, one or two like inflation payments, like, okay, where's the rest of the trillions that have been added to the debt? So I think that's why people get very conspiratorial about it. Also because they haven't been audited in a long, long, long time to see how much gold they actually have.
If you, look at the relationships with all these guys, right? I mean, Jerome Powell is an investment banker, and he worked at the Carlyle Group. He was PE guy, and so naturally, these guys there's a kind of a boys, or you can call it an old boys club or whatever, that they're just helping each other out, and there's got to be there. It's unavoidable that there's some kind of bias there, and naturally you would incentivize. If you're talking about going back to bailouts and things like that, if you look at what happened last year with the regional banks failing and what they did after that, all of it is basically consolidating more and more money in large firms, right? JP Morgan was probably the biggest winner of that, because I think they scooped up what was it, the one I can't remember the name of the bank, not Silicon Valley, the other one. Can't remember the name of that one.
I was going to say the Silicon Valley Bank.
Silicon Valley Bank. There was another bank that fell as well at that period. I can't remember exactly. Can't remember the name of it now. I know it's like a Green Eagle. First Republic. That's what it is. First Republic Bank. And they basically say, okay, we're going to backstop all the deposits, which is what they're meant to do. But then they said, okay, we're looking for buyers of all this stuff, and then it goes to JP Morgan. So then you have more and more accumulation of wealth in these big banks, and they do become eventually like too big to fail. And now you have created this cycle where there's just naturally a consolidation of more and more money in the hands of fewer and fewer people. And that's exactly what's happening. And yeah, all the COVID bailout money went to, the first thing they did when COVID happened was to inject money in the stock market, right? That I can't remember how much it was, but it was billions,
trillions,
trillions of dollars right into the stock market to inject liquidity. And the thing is, every time you do that, you basically deflate the value of the American dollar for regular people, because they're not enjoying those benefits, because a lot of those things are they're just trying to inflate the assets, but they're not trying to stabilize the purchasing power of the dollar. So what happens is then over time, every time you do this, you need to inject more and more money, right? Because that's why if you've seen the graph of like M2 or the money supply, it's going like hyperbolic, because every time you do this kind of easing, you need to do it bigger every time. It's like a drug, right? It's like, hey, first time I do a drug, I do a little dose, but then I start to build up some I acclimate to the dosage, and then I need to do more and more and more. So that's kind of what's happening. It's like every time the Fed does something like this and prints more money, they need to print exponentially more money to keep
Yeah.
that same level of result.
Yeah, well, the national debt for America in 2008-9 was about um somewhere in the range like $1 trillion. It's now like 20, which
Yeah.
20 times more. Like, are you kidding me? And that's not like it's a tiny amount. That's like it's let me check what it is to GDP here actually. Um, debt to GDP ratio. US. It's absolutely obscene. Here's what I'm looking for. National debt of the United States. Would help if my internet would load. Anyway, that'll come up in a minute, I'm sure.
I mean, yeah, what essentially what they're doing is that they're inflating, they're creating inflation. They're basically now they've embraced this idea of we're just going to have debt, excess debt. They're going to try to inflate the asset bubbles because that's who they're kind of beholden to. And all of this is basically eventually is just worsening inequality. It's going to create instability at some point. And that's why at the same time, when you talk about if you tie into the bigger picture of like the US military industrial complex, there's an argument to be made that you need to make all those investments in the military industrial complex because without the military, this whole thing doesn't work. If you can't enforce the dollar, the value of it goes away very quickly.
mm,
If you don't have that kind of geopolitical, um, I guess, influence,
yeah,
then
can't
then you
strong
really
arm
start to
people.
countries will start to look for alternatives, which is what's happening right now. It's happening slowly. I think if you look at the BRICS, nations coming together,
Yeah, I mean, it's going to take a
nothing's really
while.
happening. They look, oh well, look how much how much currency is still being or how much trade is still happening in the U.S. currency, and they're
Mm-hmm.
saying, it's very stable. But I think these things usually happen very quickly, and it kind of flips when you get to a certain threshold. Then it's like, oh, okay, well, let's jump over to that. And I think that's it's not going to be like slowly over time. It'll be slow, 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 and then all of a sudden, boom,
Yeah.
and that'll be a tough day.
I mean, for the US, I think it's probably helpful that the Chinese financial system is not in great shape at the moment. Like, if the yen was doing better, then there would potentially be more fleeing towards it. But the fact that there's not like a fantastically strong alternative to the dollar,
Hmm.
like yeah, it's the yen or the euro, and the Europe are unlikely to attempt to challenge America's like dominance, given, like you've said, the military protection that Europe enjoys due to NATO. I think it's going to be, yeah, it would require something more stable to come along than the dollar, and there isn't something at this moment as like unstable and screwed up as people say the dollar is, which I mean technically it is. I mean, you like looking at the purchasing power that people in America have had, declining over the past decade or two, but or longer if you zoom out.
Well,
But
I mean, if you go back to 100 years, I think the dollar has lost 95% of its value since if you look at 100
yeah,
years,
yeah,
and it, that's why you see so many Americans like struggling during this time period where supposedly where the economy is as good as it's ever been. And
yeah,
people can't pay rent. So something like 60% of people, paycheck to paycheck. These kinds of things are not good. If you want to talk about more of the political side of things and stability, this is kind of what fosters folks to embrace authoritarian style figures, is because they come out and say, well, we're going to fix everything. I'm going to fix it for you. It's going to be good. And
that's
naturally,
wild.
yeah.
You're right about 60%, by the way. It's saying here that, according to CNBC and SurveyMonkey survey published April 15th, 2024, 65% of Americans live paycheck to paycheck. Holy shit. That's a lot of people. Yeah.
which I think the definition of that they use, you can fact check me on this, is that they can't, it's something about a $400 payment or something like that, where if you have an unexpected expense over $400, they won't be able to pay for it. I'm not sure if this is the particular survey, but that's another figure
Yeah,
that's
yeah,
been
I've
thrown out
seen.
there.
There's loads of figures like that. I mean, it's wild. So, and I guess the real solution is to buy and hold shares of GameStop. So, so like, yeah. So, what was your perspective? Like, I watched your video with Ian Carroll. I would encourage people to go and watch the video you have on your channel. It's 15 minutes. Hopefully, we'll get the full thing at some point, like the whole
Oh,
crazy
that's all. Yeah,
sit
the whole
down.
thing is on X.
Oh, it's on X. Okay, well then, go what? I'll put links for both
Yeah.
on down below. I didn't know the full thing was out yet, so there we go. I've got something to watch tonight. So yeah, do you want to give me like what are your thoughts? Like, do you think people are insane? Do you think?
Yeah, well, the first thing we have to say is that this is not financial advice. I don't know anything. And I did. I mean, that's quite honestly the truth because I was not very well versed in what happened with GameStop beyond what the mainstream media was saying and beyond what the movie Dumb Money covered. Because
Mhm,
I've watched, I've obviously I paid attention to what they were saying in the media. I've seen the movie, but I had an inkling that there was a little bit more to the story, and um, and I think there's some. So I'll balance both sides because I've talked to a few people about this, both more of the GameStop folks, but more of the traditional stock market, valuation kind of guys that I
mhm.
come from, the NYU crowd,
Yeah.
and yeah, so there's definitely some fishy things going on, right? So the thesis, the main thesis, there's a few things, but one of the things that the media talked about was that was a short squeeze that happened in 2021,
Yeah.
and uh, some of the Wall Street firms were burned, and now it's all good. Now they've basically closed up all their short positions, and the stock is it's there's no more shorts, and it's all good. But the sort of there's I would say substantial amount of evidence that there was something that happened behind the scenes. One of those evidence points is that even after the initial spike of GameStop back in 2021, there was still considerable short interest, over 100% in the weeks following that.
Mm.
But all of a sudden, and if you look at the data, all of a sudden it drops to about 20%, from 120 to about 20%. And so that's odd. So how did that happen without the price continuing to go up, right? Because that's what happens in a short squeeze. It
Yeah.
should go up as the short interest goes down.
Mhm.
But that didn't happen. It had that initial spike, and then also there was a SEC report that was put out, and in that report, it actually states that the increase in GameStop price was not due to the short closing,
Mhm.
but actually due to just investor sentiment. So it means just people were buying the stock. And so in their own report, they said, "Hey, that's what's happening." And then when you combine the fact that dark pools, so just for those who don't know, dark pools is basically like an opaque market where stocks are changing hands and nobody knows what's really going on. They said somewhere along the lines of, I mean, this is the SEC once again, the head of the SEC saying 90 to 95% of all retail trades
Mhm.
go into the dark pool, meaning that we don't have, that means our uh, purchasing or selling of the stock is not impacting the price, because what's
Yeah.
happening in these dark pools is that these market makers, whether it be the big banks or other huge funds like Citadel, are basically trying to just say, okay, well, yeah, we'll match up this buy order with this sell, and we don't really know what's happening. And then the idea behind, so then the mainstream idea or the explanation, well, dark pools are actually a good thing because it creates more price stability. Because they, if you have large orders coming in, it could really, make the price very volatile. And so these dark pools serve a specific function in that it's good for the market.
Yeah.
I don't know how much. I mean, I don't know how many people buy that explanation because the price seems pretty
Mm,
volatile.
well, yeah. I mean, I was reviewing some of the price swings while I've been doing my final edit at the minute of my book about it, and it's some of them are stupid. Like I'd forgotten how stupid, and like ongoingly stupid, not just the bit in January. Like it continued to be bonkers for like a year,
Yeah.
which is and then it keeps like coming back every now and again, and yeah, there's many theories about what's happening.
Yeah. Have you looked at if you look at the big chart, if you go to like 5 years, right, you see the stock was not, it was just very stable.
It was
And then all of a sudden,
actually one of the most shorted stocks of all
yeah,
time. It was like more shorted than like over 99% of all stocks, but over like a 10-year period. And Melvin Capital, one of the companies that got absolutely screwed and ended up collapsing about a year after, they lost like 50% of their value on their short position on GameStop. They had been successfully profiting off of shorting GameStop for like a decade and right up until 2021, which is even more crazy. Like it'd been something that shorts had been loading up on and just bumping down and down and down, or like riding the slow decline of this business for like a decade. Which and this kind of brings me to one of the things that, like, one of the interesting videos that I saw on your channel is like is the stock market rigged? Because when we're looking at things like these dark pools, right, and you go, okay, so people were saying that buyer side sentiment was driving the price into the stratosphere, and then we say, okay, but 95% of retail trades are done off exchange and therefore aren't impacting the price in real time. So what the is causing the price to skyrocket? Like in all of these instances, like especially when recently people come out, when Roaring Kitty came out and started tweeting again, and suddenly the price skyrockets, and then someone goes, well, that's the retail getting like hyped and on Roaring Kitty, and it's another pump and dump scheme, and then you go, well, but you're telling me that they don't affect the price, so what is affecting the price? So yeah. Do you want to?
So I think that is, yeah. There's the other important thing to mention is the media's role in all of this, and coining terms like meme stocks, right? Because basically they're saying, hey, meme stocks are stocks that are acting all weird and funky.
Yeah,
Basically don't worry about it. It's just Redditors acting crazy.
yeah.
But
It's
if
not a
you
broken
start to
system.
dissect
It's
that,
some memes.
yeah, if you start to dissect that, are Redditors really impacting the price? I mean, Roaring Kitty, when he did his live stream, I think last month or 2 months ago, when that whole thing kicked off again, you could see that he wasn't impacting. He wasn't buying or selling any stocks. Price was going nuts. It was halting, doing all kinds of crazy stuff. So a lot of this, I mean, I based on the research I've done, the people I've talked to, yeah, it's a lot of it is driven algorithmically and based on different inputs. And I've heard things from stock traders saying, hey, actually, I can trade stocks, 90% of the time without even looking at the news. Like I don't even need to look at fundamentals or anything like that. I just look for certain signals in the in the market or in the price, and that'll tell me what the next move should be.
Mm-hmm.
Now, I don't have any experience stock trading, so I don't know exactly the technicalities of that. But if you look at what's actually happening, kind of true, because if you look at CNBC, anytime they say to buy a stock, it goes down, or they say sell a stock, it goes up. It's like the complete opposite of what's going on. And so that is a part of the story. It's like if we're not impacting the price, there's something else that's impacting the price. Um, and I think it's a lot of the shenanigans that's going on. And if you look at the company fundamentals, that's the other part of the story, is that, hey, there's a turnaround happening. It doesn't look like, because the whole thesis of shorting is that, hey, this company is going to go to zero. It's going to bankrupt. So I'm just trying to make all the money I can. But if it doesn't go bankrupt, then that thesis blows up. And that's when you get to the final part of the story, which is that the short squeeze is kind of yet to come because the shorts never closed. And eventually the chicken's going to come home to roost. Although I wouldn't underestimate the sort of the markets and the hedge funds' ability to continue to cover this up over, forever, because they have that kind of ability to do so. So that theory kind of predicates on the market being somewhat fair still, and
Yeah.
that they won't go to extreme lengths to do some weird things behind the scenes to cover that up. And that's kind of the main story of GameStop, right? Currently, as it stands, is that the shorts never close, and there's going to be one huge event that's going to happen at some point, although it's never proven. Now, I have brought this to counter this. I brought this story to a couple of my friends who I went to business school with and that are more, experienced in the finance world. And the one counter they had was based on sort of this the price to earnings ratio. So if you look at overall stock market price to earnings ratio in the last 100 years or whatnot, it's always between 15 and 30, the PE ratio. And so if you look at just the big picture, they're like, hey, because he's saying, hey, no, stocks, they're still tied to fundamentals. They're still it's supposed to be a reflection of future profits. That's kind of what it's supposed to be. And more or less, he says it's still doing that. GameStop, there's something, happening right now where I think the GameStop PE ratio is like 400. You have to check on that, but I think it's something like crazy. It's like 400. So he's saying that there's no way this is happening.
I'm looking this
as
up
far
right
as
now. It is
a
425.
Yeah. So if you look at the average PE ratio, should be about between 15 and 30. If you look at, I think overall S&P 500 PE ratio is somewhere in that. It's always somewhere in that range. So this is an outlier situation.
So at price to earnings
So what
ratio,
that
does that
mean
mean the price it's 425 times the earnings? Or is it the earnings is... Yeah, how do you work out the PE ratio? Let's ChatGPT in.
I think it's earnings over the price, right? Let's not give out. Let's double check so we don't give out.
Price to earnings ratio, blah, blah, blah. Calculated dividing the market value per share by the earnings per share. So
okay, so it's price divided by the earnings.
Yeah. Okay, types of PE ratios. Importance. The PE ratio helps investors determine if a stock is overvalued, unfairly valued, blah, blah, blah. A high PE ratio might indicate the stock is overvalued or investors are expecting high growth rates in the future. A low PE might indicate the stock is undervalued or the company is experiencing difficulties. Interesting. So the price to earnings ratio is obscenely high then. So we're saying that people are incredibly positive about the future of the company? I mean, that's good.
That's an indication he's saying that the stock is overvalued.
Yeah.
And so that there is no.
I guess that doesn't really cut that. The price to earnings ratio isn't taking into account the $4 billion in cash that they currently have, which is interesting.
That's true. And so then the counter, because I would always like to look for, okay, so this is one story, right? So from the GameStop community. The other story, if you talk to the more mainstream finance guys, are like, hey, the price rate earnings ratio indicates that this stock is actually way overvalued. And if you look at some of the and in terms of like what's going to happen in the future, he's saying, hey, as more retail investors buy in, what they're going to do is just going to issue more shares. They're just going to continue to dilute, and so then the people up top make the money. And the bag holders eventually get screwed. Now that's coming from the Wall Street folks. So then you have to balance. Okay, where is the real story here? Is it the Wall Street? Are they right, or is it the GameStop community, which they have a lot of evidence?
Yeah.
There's it's not just
I think the thing that's compelling is that the insiders continue to buy, like the board are continue with their own money. Do you know what I mean? It's not like they're just gifting themselves stock. They keep personally buying more, which is interesting. So they at least have some confidence in Ryan Cohen's ability to turn the company around.
And that's the other thing I forgot to mention is Ryan Cohen's leadership, his track record with Chewy, taking on Amazon and building a very successful e-commerce business in that environment, and him leading the helm, and he's not taking any money in terms of compensation other than stocks. So his incentives are directly aligned to shareholders, and that he has a plan to sort of digitize the business or basically turn GameStop from a brick and mortar business into something for the future, whether it be some kind of digitization or AI. We don't know what, like, I don't think they've been very specific about the turnaround strategy. But the belief is that he's done it before, he's going to do it again, and his he's not getting paid. It's not like other CEOs, right? Because, like, for
Yeah, yeah,
example, Boeing CEO is making $50 million exit package on the way out as his planes are falling apart. That's not exactly, he can't do that here.
no,
So that's kind of where I'm at with the GameStop thing. So it's very. I think this, if you look at the community itself, I think this, what we're talking about, is very surface level. Hey, this is kind of like
yeah,
table stakes knowledge that people have. There's a lot more behind. The DD goes much deeper than this, and um and that's something that I'm still looking into myself as I figure out the story. But that's what I mean. That's the whole goal, right? It's to get. I mean, that's why I wanted to do the video that I did, is to provide folks with like a starting point into diving into the story, and then hopefully there it sparks people's interest, and then they can start doing their own research. And that's kind of a one of the driving forces, or one of the things that I strive for, is to provide people with, try to create stories that pique people's interests, and then they go on and do their own thing. I'm fairly uncomfortable being the guy that's like, oh, I'm just going to tell you all the information that you need to know, and you just need to follow me, and that's the end of the whole thing. Is that I'm hopefully just one part of your media diet, your media ecosystem. So you learn a little bit from me, that sparks something in your brain. You go to somebody else, learn what their perspectives are. Maybe it's the same, maybe it's deeper, maybe it's totally different, and then you kind of piece together what the reality is. And that's a lot of work. I mean, I have to say, that's a lot of work for people, and people don't really like that.
mm,
Maybe they don't have time for that, but that's kind of what it takes in the environment today, right? I mean, that's what it took forever, but we just didn't have this information. But back in the days, it was just three, in the US, right? We have three networks. You pick one, they dictate the information that maybe you have the newspapers, but it's all very, gate kept.
yeah,
And now it's all open. So you have the opportunity to find the information, but you still
yeah,
need to
yeah. But you got
to
to be
to
more
to kind of do
discerning
the
with who
legwork.
you believe. Yeah. But if
Yeah.
you want all of the answers to the GameStop story, you should buy my book, which is almost done.
Yeah, I'm
Uh,
curious to know. So what type of research have you been doing about GameStop, and how
oh,
long have you been doing it?
well, I mean, I've been following since January 2021, writing about it ever since then, and interviewing, I think, more people than anyone else properly about the topic, unless there's someone else whose YouTube channel I've completely missed. But yeah, so I've just been interviewing as many people that I can get my hands on that are subject matter experts in different bits of the story, and trying to figure out what on earth the real deal is. Obviously, I read the DD and follow Super Stonk and Jimmy Jungle, and um, yeah, I've been through.
So what do you think? So
What do I
so if
think?
you were to kind of give your take on this, what do you find that's the most credible, and kind of are there holes in the sort of the theory,
Well,
the
I'd
investment thesis?
say in the investment thesis, I think that the company was worth more than it was when the all kicked off, like way back in 2020. It seemed like there'd been at least some heavy institutional shorting with the goal of boxing the company into non-existence to then walk away with all of the like all the money you made short selling the company in order to walk away with it. Yeah, capital gains tax free. There's definitely some compelling arguments that then there was the shorts did not cover, that the short interest that was reported post January 2021 was just not accurate, and that some of the short interest, or much of it, is being able to be disguised using many different financial instruments, and like you can hide them using say, for example, ETFs. You can short a company indirectly through ETFs and create downward pressure. And like one of the ETFs that has the highest percentage of GameStop, XRT, has seen like numbers of 2, 3, 400% short interest on an ETF. And ultimately, the story for me, it goes way beyond like GameStop itself. It's like a case study in like what is fucked up about the stock market. And my conclusion, having written this entire book, is that it needs serious light shed upon it in order for anything to happen, and they need to stop worshipping at the altar of infinite liquidity, because that seems to be the driver of all of the largest problems. You know, they're not interested in real price discovery. They're not interested in instant settlement. They're only interested in how can we make the market, quote unquote, more liquid. So that's basically what I think. And unfortunately, we're going to have to leave it there because I have to run. So everybody, please subscribe to this channel, obviously, but I'm sure you all are who are listening right now. And to 5149 with James Lee. Links for everything are in the description. Anything you want to point people towards, and anything you want to say in conclusion?
Yeah, well, I appreciate the conversation, Josh. Thanks for having me on. It was really fun. Next time, hopefully, we'll do another one. We'll dive into some more topics. And if folks are interested in more of my content, I would say I'm on I'm on pretty much every social media platform, but they're a little bit different. So if you go to my YouTube, they're all the same handle at 5149 James Lee. The YouTube stuff is a little bit more, I would say, in-depth, longer form, between 15-20 minutes, more documentary style. I also do a lot of videos on TikTok and Instagram, and those are more kind of, I would say, more topical discussions of what's going on and certain things that I'm finding throughout the day, and I'm just going to make a short video about it. And then on Twitter, it's kind of a combination of both, where I share stuff that are
There's a war going on
through
there's a war going on between
some of these videos. So whichever platform that you like using, I am there at 5149 James Lee. Same handle for everything.
Awesome. Well, thanks very much, man. It's been a pleasure.
All right. Appreciate it, man.
Hey, listeners, real quick. Do you ever find yourself sitting watching the stock market like this? Well, now you could instead be ordering my book like this. It's the story of GameStop. You can purchase it with a hoodie, with acknowledgements, or just with the early backers edition. It's all about the GameStop story. It's the real story, not just what you've seen on films. It's exactly what has happened over the last 3.5 years. And with DFE back, I'm finally able to draw a conclusion to my book. Please pre-order it. It really helps me out, and you will get it eventually, I promise. Hopefully this year.